What's popping, guys? So today we are doing the market review on Nasdaq on a trade that I took yesterday, and I want to go ahead and do a market review and also a trade breakdown. And we're going to see how I was able to get the analysis using get the analysis right using ICT concepts. So as you can see on the daily time frame, I'm going to just show you how I go by internalizing the markets before I go and hop onto the smaller time frames. So first of all, I'm going to be looking at dollar. So this is oh man, this is this is a mess. Okay, I'm gonna take out some levels now. So I just do like a rough work on dollar. So sometimes dollar is just looking not so great. Mm, this is a mess. So in dollar, we were at first we were anticipating, okay, where can the dollar get into? Can the dollar get into the CB? I was looking if we could see if the dollar was going to get into the CB. That is the main threshold of the CB. So if we want to see higher prices in dollar, that means we probably are going to see lower prices in the the Nasdaq and other foreign currencies. So that's one thing I was looking at. So when we got to the CB and the one we got to the CB, I was then anticipating lower prices because what do we want to see in high in the dollar? We want to see higher prices in the dollar. I was looking at where okay, can we trade into the consequent encroachment of the CB with dollar, which is this. That's why you have this Fibonacci retracement here. So this is let me show you this. So this is what I was looking at. Can we trade into the consequent encroachments of the CB? Well, let me just take this out and draw it like this so you see it better. Yeah, so this was what I was eyeing for dollar. At least then we'll see how we trade from there. Then I remember why that CB was that imbalance was here. So this is the consequent encroachment of it, and it's still at the same, almost in the same proximity with the consequent encroachments of the CB. So weeks are gaps, okay. So I treat weeks as gaps. So when I see a long week like this, I'm looking at the consequent encroachment. That's the midpoint of that week. So we went back. Now we're going to go back to the Nasdaq, and as you can see, we trade into the CB. So now let's go to the 15 minutes time frame and outline other things. Okay. So this is the 15 minutes time frame. And why are we here in the 15 minutes time frame? What I usually do in the 15 minutes time frame is I have a visual, a more visual or smaller time frame representation of what I anticipate to see before I go into the 1 minute time frame to frame a setup. Okay. So now we have taken buy side, we've traded high. And another thing I do in the 15 minutes time frame is to mark out the midnight open and the 8:30 open. So after the 9:30 opening bell, I want to see where we are. Are we in close proximity to this midnight and 8:30 open? Because this serves as a strong premium and discount array in the sense that if we are above the midnight and the 8:30, it means we are in a rich premium. And if we're in a rich premium, you don't want to be buying in a rich premium. You don't want to be looking to go long. You cannot go to the supermarket and normally you get an apple for 200 naira, and all of a sudden you go to the supermarket and they're telling you, this apple is 1,000 naira today. You're not going to like that, right? You want a situation whereby you can buy it cheap. Okay, so what do you want to do in a rich premium? You want to be selling, and what you want to do in a deep discount, you want to be buying. So if we are below the midnight and the 8:30 open, I want to buy. I want to look for opportunities to go long, but this has to still be in agreement or an alignment with your buyers. So we have traded to the daily CB. This is the daily CB, consequent increasement of daily CB. Now, can we look for a setup that can frame us down lower? And now, this is another thing you need to note: opening range gap. That is another good confluence. Majority of the time, we are always going to be priced to consequent encroachment of the opening range gap, and this is behind. This is where I frame my setup behind, and you see, we hit that like gangbusters right to the opening range gap, consequent encroachment, and we take off from there and we started going higher. We never went lower than that. We didn't even fully close the gap. Sometimes you don't expect to fully close the gap. Long term, I think Nasdaq is bullish, but for Friday was this week was kind of easy, but long. It took longer to actually actualize or materialize, but it was kind of an easy going week. But let's go back to the topic. So, how do we get this opening range gap? As you can see, I'm not privy to the data that gives you regular trading hours. So I do that myself with. I don't need an indicator for this. I just do that myself manually. So I have this templates, okay, where I just had it so it's easy to bring out. So I have the regular trading hour close, regular trading hour open, and that is what you see here. These two white um horizontal ray. So um I go to the Nasdaq closes at 4:15. So at 4:15 you have to put out, okay, where did we close at 4:15? You mark that. That's going to be your regular trading hour close. Then 9:30 is when we open, so that's your regular trading hour open. So it's also called opening range gap. So where did we gap? From here to here we gapped up. Gapped up. So now when we've gapped up, we traded higher. I'm anticipating for us to trade back at least to consequent encroachment of that gap. That is the gap between this close and this open. That is your opening range gap. So that is it. So I've seen this already. I like what I'm seeing here. We've gapped higher. Now I'm looking for a reason to short back into the midnight open, the 8:30 open, and the regular trading open. I'm looking for a reason to short back down to the opening range gap consequent encouragement. I want to go short on that. So in the 15 minutes time frame, I mark out these levels as you can see. Then go now to the 1 minute time frame. So now as you can see, it's all journaled out how I took the trade. So this is just me explaining it out because I had this journaled. As you can see, I'm next to my trading journal. So I had this journaled. So this is how I took the trade. So we have an SMT here with the ES. We had an SMT with ES. ES made a higher high while Nasdaq failed to make a higher high on this high. Okay, so that's an SMT. So now we have a breaker, a high, a low, a higher high. That's a breaker. So we traded into those breaker, and you see something funny happened yesterday. I don't know, the reception was so bad, so I didn't get filled in properly, and I'm gonna show you that now. I didn't get the feel I wanted, but it was still something. It was still something, but I didn't get the feel I wanted. So as you can see, I wanted to go short right at the touch of this other block, putting my stop above this breaker. Then if I get a re-entry, I will enter. But for some reasons, this is where I got short. I was supposed to go short on this touch. I didn't get that feel, so I got my short here. Then once price was going back into this other block, look at this. As you can see, I got the second shot. So this is the explanation. Entry was the other block. That was the entry. Second entry was off the breaker, and I got the fill as well. Then my stop loss was above it because I've seen an SMT. I do not anticipate for us to trade back lower. And my target, this sell side liquidity, I took my first partial just to book something. And after I took my partial, I moved up towards break even and I booked something from the trade. You have to pay yourself. So then I anticipated and I was supposed to put my stop. I put my stop just below here, but then I was like, I like the sell side liquidity, and we are getting close to the opening range gap. So I did not wait for the fill, but I had that look. I had looking at that, but I did not wait for the fill. I was very content with getting just below this, and as you can see, we got that below the sell side liquidity. And now I want you to see something. This is a place where you could get panic. You could panic or something, but that is why you need to back test and keep on practicing because so many traders, when you get so close to your targets, you could get frightened and close the stop and just close the trade. I won't say it's bad like that. Sometimes in situations where you read price, maybe you can actually do that. But why I had the confidence was I wanted to see this happen because there were so many factors backing that it will happen. This is the consequent encroachment of the opening range gap. We have traded below the midnight open and the 8:30 open. I am anticipating, I am expecting this because these places are strong premium arrays. So I know that price can come here and jiggle and play around. But when price was here, my stop was just above this breaker because my stop have moved my stop now to secure more just in case price was going to turn away. But I was anticipating this reaction because this is the 8:30 open. We went back up, offered premium, then pushed to our major, like this is the major target. Well, I was very, very satisfied with this. I was very satisfied with the sell side liquidity just below this level. This is a imbalance. This is an imbalance. I knew that price is going to fill them up. So we had our stop here just below that sell side liquidity. And as you can see, good. In close proximity to the opening range grab, consequent encouragement. So this was how the trade was yesterday. Very nice and smooth. Like it was just smooth sailings for me. And one other thing I want you to notice is okay. One other thing I want you to notice is this. So I was anticipating that once we took this, we got into the macro, the 1050 to 1110 macro. I'm expecting speed. I want to see speed in these levels because it's either going to go in my target or speed away from this CB completely. So I wanted to see speed away from this level, and we got that here. I had my first TP here. So this is in the places where you have to incorporate time and price. The price is not just random, it is run by algorithm. So you need to understand time and price. What have we been doing since we opened? Oh man, what have we been doing since we opened? Look at this. We've been going long, right? We get to the AM macro, and what happens? We start to sell. We start to take out people that has been making money in the market. If you went long here, where are you trading your stop? You're trading your stop here. You're trading your stop here. That is why I took profit here, because it can as well want to do this and do something else. So trading your stop here. I'm taking my partial here. You're trading your stop here. I'm closing my full top my full target here. So this is the basis on attacking liquidity in the market. So this is the price. This is the market review and the trade I took. As you can see, this is real execution. Mm. So this is real executions and my final targets here. So that is that for the market review, guys. Until I catch up with you guys, safe. And if you have questions, you can always leave your questions in the comment section. You can text me on Instagram. I would be able to respond. So whichever way, it's good. Thank you guys for watching. Be safe.